Happy Monday. What's going on, guys? It's Ricky with TechBud Solutions here with a super quick market update. Let me go ahead and catch you up to speed. For those that have not seen, Oaklo at one point was up over 4% during the overnight trading session to highs of 146. For those that do not know, Oaklo is one of the highest performing companies or stocks of 2025. Quick little disclaimer, I think it's a complete piece of shit company. I think it's absolutely worthless. And the only reason it's thriving pre-revenue is because these irrational markets support irrational valuations. Just my opinion, right? With that being said, do I recommend shorting stocks like this for beginners? Heck no. It's incredibly risky. In my opinion, this is a complete momentum-based stock, and it can continue to push up. Oaklo can go up to maybe $200 per share. Who knows, right? Who knows where the cap can be for these irrational valuations? Nonetheless, I saw an opportunity. I had a small position over the weekend when it came down to shorting it. And then during the pre-market session, I saw the lower lows and lower highs. I added more to it. Didn't even go in with that large of a position, about $100,000, and direction was super favorable. Right when the market opened, we ended up selling off an additional amount. It hit lows of 123 in today's live trading session. Again, for my LPP team, they get to watch me trade live every day. They saw me take profits and cover, and this thing sold off. And it wasn't a perfect exit, but I covered a lot right around 125 to 126. I ended up selling off to lows of 123.72 and has now since then recovered. This is the beautiful part about trading is that if you can do your part in respecting oversold and overbought levels, you can do well, right? If you respect it and also respect the trend. Now it's going back up to retest. I reopened my short position. I'm up $6,000 on the day so far. And based off of my risk to reward setup, it's a 4.5 risk to reward ratio, meaning that it offers 4.5% for every 1% of potential risk. But again, an incredibly risky stock because again, it's just a momentum-based stock. This thing can skyrocket for no reason, just based off of any news or any breakout. The only other trade that I've taken that I've closed out right now is TEM, $3,400 on the day. This was also caught in today's live trading session with my LPP team, $3,400. Position fully closed. This one was beautiful. I opened up short here during today's live trading, added more to it. When it found support, I covered my short, then it broke support, added more to it, and then let this thing kind of ride, made $3,400. And there was a lot of money to be made. And I think today is just a beautiful day to be shorting shitty stocks because finally, they're beginning to fall apart. But again, market conditions are still very bullish, so this doesn't mean that it should be a swing trade. As of right now, yeah, they're selling off, but TM can skyrocket by the time that the market closes. So don't get it twisted, right? That's why I closed out my position, 3,400. And again, if you ever want to watch these live trading sessions, I trade live every single morning. Second link in the description down below. But the big stock that I want to talk to you about today is Tesla. Have not traded Tesla. Tesla did gap up. A lot of people are looking to short Tesla at these elevated levels. I kind of encouraged against it. And the reason why is that Tesla has been on this like momentum run lately. And Tesla, when it does get going, it gets going, right? And it kind of reminds me of what it was doing kind of like late last year when it pumped up to highs of $488. And right now, every Tesla bag holder is coming out of the woodworks and they're like, do you see, never bet against Elon, this is the future. I was like, dude, you've been down 50% for the past 4 months. Finally, you come out of your hole that you've been hibernating in, right? It's okay. You can't talk about the value that Tesla brings when, just a month ago, you were in the red. Tesla, yes, has a lot of momentum right now. It's a good trade. That's all I see it as. Technicals are in your favor. Market sentiment is in your favor. I still don't really think it makes sense to aggressively short this. And the reason why is that the risk to reward, it offered about 2 to maybe 3% of potential downside, which is fine. But again, Tesla's incredibly bullish right now. I just don't think possibly to make 2 to 3% is worth the risk of Tesla breaking out based off of, really insignificant news. If you guys didn't see, over the weekend with Elon and Trump shaking hands and provided some form of bullish sentiment. And there was also a new price target from an analyst based off of up and coming deliveries. And that's the thing that I wanted to kind of really talk about today. Tesla is set to deliver its third quarter estimate for its number of deliveries. It absolutely just came in way below expectation for its previous one at 384,000. But according to Warren AI for investing.com, we have an expectation of around 465,000 units, which was boosted by the U.S. consumer accelerating purchases ahead of its expiring $7,500 EV tax credit. Tesla is spending a lot of money in its marketing right now to remind people that they have up until September 30th, so just 8 more days, if they want a $7,500 EV credit. So I would not be surprised if this quarter they actually do meet their consensus or their quota based off of this hopefully strong end to the EV credit. Because after this is what everyone is concerned about. And no one that's invested in Tesla or that's telling you to buy Tesla will ever want you to know this. And it's Barkley predicts that Tesla's Q3 deliveries will come in at 465,000 units, outpacing the consensus of 430. And that's great, but here's the catch. This short-term spike is expected to make a significant drop in Q4. Why? As they are, again, pre-buying boost fades after the underlying demand cools. So what they're talking about is, well, after they no longer get that $7,500 tax credit, there's no more incentive to be buying a Tesla. On top of that, Tesla will also no longer be receiving these EV regulatory credits, which it earns billions of dollars every single year of net profit just off of those regulatory credits. And that's the thing that, again, people are refusing to acknowledge. But it's okay, right? Because markets are irrational and they support these irrational valuations. Because anyone with a form of common sense, they can see that not just looking at its P ratio, Tesla has always traded at a high PE ratio, right? 250 times its earnings is not far from what Tesla is used to. The concern is the revenue. If you pull up the actual pro research from investing.com, you can see its revenue is beginning to decline. It's no longer a growing company. And that is where the story ends. Remember, we've made it very clear. You can only support irrational valuations when your company is still aggressively growing. PLTR is a great example of this. PLTR is insanely overvalued, more than double of the overvalue, right, PE ratio than Tesla. But PLTR is growing at an accelerated rate. I'm not justifying its valuation by any means. I'm just saying that it can talk its crap because it's walking the walk as well, right? Tesla's not. Tesla's been promising things for the past 5 to 10 years that it has not delivered on. Where's the Tesla Roadster, right? Now people are resorting to the idea of when you point out that, hey, Tesla's no longer growing, like Tesla's not just the car company. It has the Optimus robot. It has the robo-taxi. Okay, how much revenue does it make from that? It's like they always change their narrative. They always change their story when you begin to point holes on an obvious red flag. Tesla is a car company. Of course, that's not just what it is, but that is its core business right now. And guess what? Its core business is dying. And this last quarter will be the last quarter where it earns and has the incentive of the $7,500 tax credit. So again, there's nothing wrong with trading Tesla as it pumps. I hope that it runs up to maybe north of $500 per share, because again, the quarter that follows is going to be very dark for Tesla. Just like we've seen it in the past before, just as quick as it runs up, Tesla does a beautiful job always giving it back. And people often say, we'll never bet against Elon. No, I wouldn't say that. I would say know when to bet against Elon, because it is obvious that when we reach these insane and elevated valuations, all you literally have to do is just wait for confirmation. Tesla always does a beautiful job of pumping and then dumping shortly after, because it always gets ahead of itself. And now it's not just about the what if, it's about, hey, Tesla is also not growing any longer. Its revenue is declining, its growth is declining, and it's its last official quarter with its EV tax credit. This is an exciting time to be watching Tesla, to see if Elon can actually turn things around. Because if not, again, investors don't want to be invested in a company that is no longer showing signs of growth. So it's going to really have to start delivering with its Optimus robot or its robo-taxi or whatever dream it's going to start to sell out next, because this extreme valuation is no longer going to be supported with declining revenue. So the ticking time bomb is coming to an end. Very excited to follow up. This is a stock that I have at the top of my watch list, but just to watch. I don't think it makes sense long term to invest at $440 per share. I don't think it's a good investment. That's just my opinion. But I also don't think it's a good short. I think that for the current market condition, and although there might be slight retracements right now, current market condition does support a rational valuation. So just be mindful of that. Remember, our time will come to short Tesla. I still think it's a little early right now, but I'm very excited to follow up. Let this thing pump up as much as it needs to, because we all know that Tesla does a beautiful job crashing. I just hope that those that choose to buy at these elevated levels do their part in taking profits when it makes sense. And hopefully you're not too margined out or leveraged out at these levels where you end up getting margin called. So very excited to follow up. Again, we'll talk about this more in tomorrow's live trading session. If you ever want to tune on in, second link down below. If you want to download Investing Pro, again, you guys can get 15% off by using promo code Ricky. And that's the first link in the description down below. Like always, let's make sure that we end the year on a green note. Take care, team.